This is MahendraGuru.com, the Brahmas for Success, and you're watching The Talking Point. All that matters is a story. In this special show, we would focus and we keep on focusing on all those topics that are becoming the talking point. This time around, no guesses for guessing this particular talking point, and that is the Reserve Bank of India bi-monthly monetary policy review. Like previously, we will discuss on the details about what were the highlights of the monetary policy and also tell you in a brief about what is a monetary policy. Now, time and again, every 2 months or every bi-month, RBI provides a review of the monetary policy in which it tries to absorb or inject money in the market, thereby stabilizing the economy. Similarly, this monetary policy also has different factors. It provides different tools to manage the supply by absorbing the money or by injecting the money in the market. Now, those are called as direct instruments as well as indirect instruments. Now, it could be a CRR, that is cash reserve ratio, SLR, statutory liquidity ratio. Then we have indirect instruments. It could be a LAF, liquidity adjustment facility, or it could be a MSF, that is marginal standing facility. So with the help of the direct tools and the indirect tools, the RBI tries to manage the money supply in the entire economy. The liquidity, that is the ease of money supply, is made more simpler by the RBI through this particular review. Now, what are these? What is a CRR? What is a SLR? That we will discuss in the later specific parts of the monetary policy, and that we have discussed in the earlier videos of monetary policy. But the crux of the issue today is going to be the review of the monetary policy. So let's see what is the review of the monetary policy. The first one, the repo rate has been kept unchanged. It is at 6.5%. The reverse repo rate is at 6%. Remember, in the previous review, the corridor between the repo rates, between the reverse repo, and the MSF was curtailed to 0.5%. So you can see here, as there is no change, so the repo rate and the reverse repo rate is 6%. The cash reserve ratio is again unchanged at 4%. Here, in the previous review, we were discussing that the daily maintenance was reduced to 90% from the early 95%. For example, if a bank has a deposit, that is NDTL, of 100 crores, 4% of it has to maintain. But for example, the 4% is 4 crore. Now, 95% of 4 crore had to be maintained daily. But since it has been reduced to 90%, so 90% of 4 crore has to be maintained. But that was in the previous review. In this review, that has been retained, and also the CRR rate is also being retained to 4%. In terms of this particular review, the main the main reason of this particular review was based on making the market more accommodative, thereby retaining the rates and thereby making the money flow more into the market. As per the RBI, the growth rate, that is the GDP rate, is at 7.6% for the current fiscal, that is 2016-17. If we discuss about the inflation targets, it has been kept unchanged at 5% for January 2017. So by January 2017, it would be at 5%. That is the prediction of the RBI. Now, there was a very important word that had come time and again in the examinations. That particular word was MCLR, that is marginal cost of funds based lending rate. So they have a comment on that particular thing as well, to review the implementation of the MCLR framework by banks. So on the 1st of April it was implemented, and now they are trying to review about the pros and cons of that new lending rate on floating rate loans, and then they would provide a report. In terms of the economy, there was an impact of the firming of crude oil prices. The implementation of 7th pay commission need to be watched, because that could lead to instability or difference in the money supply. The interest rate transmission is also very critical, because if the RBI is trying to make banks reduce the rates and still the banks are adamant, that could not lead us anywhere. So anyhow, they have to see across that if the RBI is trying to accommodate the market, the banks follow the same route. In terms of the banks, they are trying to infuse as much as capital possible, because as you already know that the RBI and the government are hell-bent on reducing the NPAs and increasing the capital, thereby meeting the Basel III norms. So anyhow, they're trying to make the banks more stable in terms of capital. Public investments needs to gain strength, and the continuing weakness in the private investments is a big concern that need to be washed out in this year's review. So anyhow, this particular review is similar to the previous review in terms of the rates. In terms of the inflation target, it is at 5%. Again, that is similar. The growth rate has been pegged at 7.6%, and various factors like 7th pay commission, which was also a factor in the previous review, has been the main reason behind RBI telling the banks and also the market to keep a close eye on these particular factors. Now, if we discuss about the different charts provided to us by PTI, that particular chart, we have the channel, we have the we have the review by review analysis of the different rates. If we discuss about in yellow, we see that the rate, that is the reverse repo rate, earlier was at 6.5%, but now that is on 7th June 2016, it is at 6%. In terms of the repo rate, that was on a high of 7.5% on 4th of March 2015, and now on 7th of June, it is at 6.5%. So here you can see that we have a 1% interest rate change in both the rates, reverse and repo rates. In terms of the CRR, that has been constant. So the amount of cash that a bank has to deposit with the RBI, scheduled commercial bank has to deposit with the RBI, has been kept constant. Thereby, the credit creation is far more stable because of this unchanged CRR. In terms of the other graphs, you can see here by the entire setup that from April 7 to 2016, CRR is stagnant, it's constant, but the repo rates and reverse repo rates have undergone a change. Now, these were the highlights of the monetary policy review that was given by RBI on the 7th of June. We hope that this particular analysis was fruitful to you, and in a way, the questions could arise from the different rates. So take a close look in terms of the rates. 6.5% repo rate, reverse repo rate 6%, CRR 4%, SLR 21%, and the MSF is a 0.5% higher, that is 7%. So the rates have been kept constant here. If we discuss the other highlight of the week was the impending merger of the SBI associates. Now, the government is set to clear a proposal to merge 5 associate banks with itself and acquire the newly created Bharti Mahila Bank. Now, the associate banks that may be merged are State Bank of Bikaner in Jaipur, State Bank of Mysore, Travancore, Patiala, Hyderabad. Now, these are the associate banks in which the first three banks are listed. In terms of previous mergers in associates history, in 2008, the State Bank of Saurashtra was merged with SBI, and in 2010, the State Bank of Indore was merged with SBI again. Now, SBI now has close to 16,500 branches, including 191 foreign offices spread across 36 countries. Now, the merger will create a 37 lakh crore banking behemoth with over 50 crore customers. Now, the total merged entity would be around 555, that is $555 billion US, a big amount, with 22,500 branches and 58,000 ATMs. Now, why further moves of mergers have failed? Number one reason is the lack of capital. And number two, there is stiff competition from employee unions. If you are an avid reader of the newspapers, the associate employee unions do not want this merger because this could lead to further decrease in the autonomy of these particular associate banks. So these are the two factors that are the Achilles heel in terms of the merger of SBI of SBI associates with the SBI. So this was the talking point, and we discussed two critical issues. Number one, the bi-monthly monetary policy review, and also the impending SBI associates merger. We hope you liked the video. Subscribe us on our YouTube channel, that is www.youtube.com/c/Mahendra Guru videos. Also, like our different videos, like how to crack the different examinations, the exam ki baat, tips and tricks, and also different subjects. For example, a very famous video on how to learn general studies has gained popularity, and also how to understand the rearrangement, because these are the two videos that are more in demand. So go through those videos. Also keep in mind that we have published the UIIC booster, that is key to UIIC, the last star booster, that has the basic insurance and the descriptive topics covered that would be fruitful in the 12th of July examination of UIIC. With this intention and with the intention of providing you quality data so that you succeed in the competitive life, your success is our success. Thank you.